Yeah. Yeah.
What is going on? So I'm going to do a quick uh, SPOOS review here, just a little ES review. I did my weekly equities charting review, so I'm gonna bust this out real quick for the E-mini. I think a lot of folks might find this useful. As you guys know, I mainly trade the E-mini. It's kind of my baby. Um, I do trade other things. I trade stocks. I trade some other futures, but I put a lot of time into the E-mini. So I will be doing these in the future um, on Twitch because of the lack of latency there, where I can interact a little bit better with people. So if you haven't subscribed to my Twitch, and you do want to be live and kind of discussing things, which I find a little bit more interesting, then in the description below I have a link to my Twitch. Okay, so anyway, I'm gonna just go over the E-mini 60-minute chart here. That's what I've got up here. So this chart is only showing the regular trading hours, and these lines here, as you can see, they're labeled gap. Right? This is just a little study in Sierra chart that looks at any close that hasn't been filled. Right? So this would be a close. This is a gap, obviously. So big gap here, right? And then it just extends out in time until the price moves back and fills that. So it's a nice little gap fill indicator in Sierra chart. So you can see we've got a gap down here, pretty good one, 14 all the way up to 37. So over 20 points. That is significant. Anything over about used to be 10 points. Now it's probably, because of where it is point wise, probably more like 15 points is fairly significant. So anyway, this one goes from 14 all the way up to 37. So what I like to do is just spin a little, put a little bit of color on the chart here, and what we'll do is we'll just modify this text and we'll call it a gap. What day was that? Let's see. So that was 4-5 gap. So we'll call it modify text 4-5 gap, and then that way when we're looking at it on our short time frame charts, we'll know what it is that when we get there, because we'll eventually get there. I mean, things don't go up forever; they retrace. Not to say I'm bullish. So anyway, up here we have something very obvious, right, in the regular trading hours, and that's partially why I'm showing you guys that. Is this is an area of balance, right? Tried to break out of this balance earlier today. Here, let's do this. And the market said, at the close, which is, given what we experienced yesterday with this huge volume sell here on the 5-minute yesterday, this was 100,000 contracts in this area. That's huge for 20 points. So, and what happened today is the market recognized that the news that generated this would not be as extreme as the initial headline, and so the market liked it. And all those shorts, we came up on lower volume, and all those shorts got obliterated. And we were calling that on Twitch today. Not on Twitch, Discord. The Discord, by the way, is not for live calls. It's for discussion of the markets, but inevitably you get some decent market calls in there and stuff like that. Okay, so anyway, we absolutely just bent over all those folks on volume through this area. So everybody who was short in this area, I'm sorry, we were laughing at you today in Discord because we figured out that all this high volume was just going to get roasted if we pushed into it. So a lot of short interest there. You remember, when there's someone selling and it's on high volume, there's someone also buying. And remember, markets on balance go up more than they go down. So when you get a stupid high volume close, markets tend to, if they bounce off that area, go up for a long time, right? So markets sell on high volume, right? And smart players absorb on high volume, okay? Especially on the closes. And then they rise on lower volume. And it takes a lot longer for, you know, it's painful on the upside, right? You get all the naysayers all the way up saying, oh, this is unsustainable, blah, 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 and now here we are, right? Pushing out of this level, oh, unsustainable, and now, you know, end of the world on this drop. No, it's just a little pullback balance area for now. Okay, so this is a 60-minute chart. Nice to look at these levels and to see what the market's doing. We broke out of a larger balance here. Measured move is actually a little bit higher. But I just wanted to show you sort of the gaps in the market, sort of the 60-minute short time frame consolidation area, right? And what these profiles are here, so like these are weekly profiles, right? So this profile is on the weekly is what it is, right? So just you could see that. So this is this week on a weekly. Again, this is RTH only. So if we go turn on the extended trading hours, this will look a little different. The indicator or study that we have on there, which shows gaps, is not going to work the same way, right? So let's just, right, you see how they all go away. Why? Because overnight, a lot of those get tagged. All right, okay, so we look at regular trading hours gaps. That's what we are supposed to look at. So anyway, now this all looks a lot different, right? So anyway, these are the volume profiles for the week. They tend to act as little nodes. So you know, kind of good to have a 60-minute with the weekly volume profile like this. This is point of control for the week. This is point of control. This is point of control. And if we go look here, this bottom left chart is a 15-minute chart. All right, so today we established the buyback area would probably be here at, I said, between 71 and 72, okay, as we were consolidating here. So that's probably going to trap shorts intraday. And because this is where we sold off from, right, anybody who was short in this area, and we're now above here, they're getting squeezed. If there's an aggressive, if we aggressively buy here, we probably go long. And there was liquidity sitting on the book on 85, so that was our call for the high. Okay, we got it. It was nice. So really interesting. Some traders actually traded this in the chat today. I traded it, but people did really well on this pullback and then taking profit at 85. That was just really good. Some people took profit a little early, but anyway, here's the 5-minute chart, and the 5-minute chart up here shows today's volume. So T+1, 131,000 contracts on the cash close. That is for 5 minutes. That's this bar here. All this, that's 130. So we had buyers on the close today. You could say, oh yeah, we had sellers. Yes, we also had buyers. So just remember that. T plus 2, only 69,000 contracts, right? So as we were rallying today, so going a little bit over today as well, what happened when we hit T plus 2, right? Hit it, smartly consolidated, pushed above it. Why? Because it's lower volume. If this was 120,000 contracts or something, we would have struggled, but you had to remember what helped us to push past T plus 2. Here's T plus 2 up here. Is that 120,000 contracts of short and a lot of short interest in this bar on that news. Once we started pushing into that, all those guys were adding fuel. Okay, which is why you got the massive. Here, let's widen this out a little bit. That's why you got the massive short squeeze. I mean, look at the deltas just climbing. Look at this. We're pulling back. Deltas are going up. They are hitting the ask all the way. Look, we're pulling back. Deltas keep climbing, right? And it keeps going until what? It was unsustainable up to this point. The deltas were it was unsustainable up to like 35,000 deltas up here, right? Little measured move off these lows, right? You see that? Balance from here to here. Some measured move right up to it. And then we had tons of sell ice here. Tons. Meaning, what's ice? It's my short term for iceberg orders. Check it out. Check it out, man. Look at this. They were absolutely, look at this ice, de-risking into this move. They were selling in advance. Ice, ice, baby. Look at that. Ice. Look at that. 2,300 contracts bought up here at 85. Yeah, there was 750 on the book. But look, 23 positive imbalance, meaning they were absorbing to the tune of plus 2,400 contracts here. Let's widen this out a little bit, right? You see that? 2452 is the total. So this right here was like 90% absorption. So that 700 had icebergs behind it as well. Visible plus people selling that level. Where did we go? Just a little higher, where they aggressively took it down, right? You see the pink? It means they were hitting bids, hitting bids, hitting bids, right? And then finally on the way down, we started getting more icebergs down in here, right? But think about where they were starting to de-risk with volume here in through this area, and then where they started iceberging, because they didn't want the market to bounce. They're absorbing here, right? And they're going to push it down because they know all these trap deltas all through here, and they're going to, if they're going to push it down through this area, they know that they can't show their size, right? They can't initiate a bunch of buying because they need to cover. So the ice starts, and then it's just, this is getting close to the close, right? There's the 131,000 contracts down here. It's just all ice, ice, baby. Check it out, right? They're covering all their shorts, and they're buying back, and they're buying back, and they're buying back. And they're buying back. Even after the close, they're buying back. Look at all this ice post cash close. Look at that. Buying, buying. They don't care that you're all dumping because you're too long. They're just buying. They have to buy into that weakness as you're all bullish because, oh, intraday reversal. You got to look at the big picture. The big picture is that today wasn't just this with the pullback. No, it was this with this little pullback. Right? Highs, all-time highs, I think. Healthy markets go up and retrace. people say, oh, it's bearish. No, it's not really bearish. So anyway, I'll show you a little bit more today. I have this thing called Rule of 3 that I've talked about forever and a day on YouTube. Okay, check it out. 1, 2. Ah, we broke it. Found liquidity. Pulled back. I missed this. I was long from here. I missed this. I should have taken profit and bought back in the trend because I know about this, but I was so focused on, does this look like accumulation here, that I missed selling and then buying back. I was like, no, I think it's going higher. So anyway, I was at TP1, TP2, TP3 was 78, and then the rest I wanted at 85, and I got it. It was good. I didn't even care that that liquidity, crazy liquidity, was up there at 85. I was there waiting, and it filled me. So it was nice. But this is a nice rule of 3 on the upside. But now look on the downside, right? We've talked about rule of 3 if you've been around for a while. 1, 2, and what? When we have a gap and we don't even hit the third, what is that? You see that? I've got it on the chart here. Gap. It's Super Bowl. That's what that means. And what did that correspond to? The swing high prior to the Biden saying, news about, raising capital gains tax on the rich. So, nice setup today. Super nice. But for the week, right, longer term, let's go look at some other charts. All right, so this is the 5-minute. All right, let's push that back in. 15-minute is just a little bit of a different view. I like to use it for signal bars, for patterns. 15 it confirms and works a little bit better than the 5. So this would have been a signal bar to get short here. That worked out nicely. You know what? I'll admit it. I shorted 86. You know where I covered? 84.75. And I told everybody on Discord, I said, man, I will bet you that this is the short to hold. It's like people were saying, well, what's your plan? Well, my plan was to take +4. That was my plan. I had a 2.5, 3-point stop. I can't remember what it was. And then my plan was to take +4. Okay. And as soon as I saw the action and I was out, I was like, man, I should probably be getting short. And just psychology kept me from getting back in. And then it just, moved all the way down. I said here it's probably going to retrace 20 points. It did. It was that type of intensity on the selling. I recognized it and I just did not act on it. So, but that's, that's part of trading. Had some good trades in here nonetheless today. So anyway, let's go to this chart. Doesn't matter. Let's see. Bookmap. Nope. Let's go to a TPO chart and let's look. Oops. Sorry. Let's go to the weekly. Where is it? It's here somewhere. Weekly TPO. All right. All right. So let's take a look. This video will be saved, so you guys want to come back and watch it. That's cool. My equity charts review is being uploaded from Twitch right now, so don't necessarily need to be on Twitch, but if you want me to chart some individual names, I'm happy to if you request it live. Otherwise, ain't gonna do it. I'm not gonna keep track of it for the next week or the next time. You just have to be there live, so whatever. So just looking at this TPO, what I like to do is I like to establish, so like here, when we came back down intraday, I had this already marked this up on the chart green. This is the prior week's TPO point of control, so the time point of control right here, and we bounced off 22 intraday like you wouldn't believe. So it was super profitable. But looking up here, we have like this little double distribution with a lot of time being spent here. I mean, we have two distributions that are essentially balanced up here. And quite heavily. So like this one, last week, right? Not this is this week, but last week had a lot more volume. So this right side is volume here. So it's value area high was here, value area low was here. Lots of volume and time spent here. This week, a little bit more on the high side. So this is kind of turning into, on the monthly, right? This is turning into, right? On the monthly kind of looks like this, right? It's here. Let me see. I'm not going to switch to the monthly, but you know, on the monthly, when you aggregate all these, the monthly, and this is important if you study shapes, right? The TPOs are just basically looking at bell curves, right? And it's saying that 70% of the time price spends, you know, in this area. You know, that's your 70% or value area. And then this area outside here on either side is like 15% and 15%, right? So within here is like the 2 standard deviation area, right? It's got a 70% chance of staying between here. Outside of here, it's like, okay, probably it's going to return to value at some point. Okay, so that's why these all kind of look the way they do, kind of like like this, right? Like this one's kind of incomplete a little bit. But what this looks like on the monthly, right? You got to kind of think about where the monthly is. Okay, here it is. So here's your weekly. Okay, let's get rid of that. So what the monthly ends up looking like is, right, this is this one. So if we flip the bell curve horizontally, it looks like, right, so it's essentially saying like, well, kind of looks like it's incomplete as far as a bell curve goes this way. So keep that in mind. Let's go back to the 60-minute chart, right? 60, where, oh, sheesh, I got to get rid of this pen. Okay. We have a balance area, right? That, if we break out of balance, where do we go? Okay. That's simple, right? You measure chart calculations, right? Bottom of balance, top of balance, plus 75. If we break out, we go plus 75, 4260. Okay. All right. So what else do you want to do? Okay. Well, you want to look at a little bit higher time frame. If we go to 4260, are there any trend lines associated with that right now? Right? Can we draw something that gives us confluence? So first of all, this chart includes the commitments of traders, right? And it is the newer report, which breaks this the dealers, asset managers, leverage funds, and other reportables into 4 separate categories rather than just a few. And this is so it's better. You want to look at asset managers. They're the ones that typically move the market, and you can see the correlation, right? See that? Asset managers still kind of in disbelief of this rally. When they start to get crazy, well, you want to think about the market flipping the other way, right? We know in June there's some humongous traders that have some VIX, have bought some VIX calls, and the VIX needs to get to stupid levels for those calls to become profitable, and they've spent. So it might be a hedge, or it might be someone, who knows, we don't know. But you know, think about the timing of that. So anyway, what did we measure on 60-minute balance? 4260. Okay, let's do this differently now. Let's look at this. Let's get rid of that. Let's get rid of this trend line. Now let's try this. Okay. Oops. Okay, there you go. Oh, I'm right on the volume, that's why. Let's see. Yeah, need to shrink this. Okay, that's fine. We'll shrink it. All right. Let's do something kind of interesting. Now, let's go to the top of the weekly. We're in a channel. Starting to get a little crazy, I know. Got this gap here. We know we have that. All right, let's do something else. Let's make another channel. And let's go shorter term. Okay? What's the high of this kind of local channel? We already had a pullback. Here, let's finish. It's right here. Okay? Now, we already know we had a pullback here. And we had a balance here that we broke out of. Right here. Little symmetrical triangle, right? Higher highs, some lows, lower highs, higher lows, and then whoop, crazy dildo candle, shoop, and we're off to the races. So, okay, we said 4260. Where's that? 4260 is, so we'll make it red. So we're just looking at confluence here. All right, there's 4262. Kind of the upper end of this real hypothetical potential channel, right? Maybe even a little higher. Markets love to go higher. Now look at where the commitments of trader is, right? Of traders is. Look at in this channel, right? Just been bouncing. It's got room. Now, commitments of traders is looking back at Tuesday, right? It's a delayed report, but it's what we have. So asset managers as of Tuesday had gotten a little bit longer. So, okay. Let's go to the daily then on this. Let's make sure we're on this chart. Oops. Let's go to the daily time frame. It's going to mess up this report a little bit. We know that. All right. So asset managers were getting longer on Tuesday. Okay. Went up even, right? On the pullbacks. Kind of interesting, isn't it? They were getting long through here. Buying, buying, buying. Market tends to follow them. It's got some room in the COT to come up. There's our measured move off the 60-minute, right? You can kind of see the 60-minute on the daily here, right? Balance here. If we break up, 4260 is resistance. So I'm just saying, you know, you be careful stepping in front of a market like this. You know, you want to wait for some sort of reversal like this, right? You see that? Parabolic, and then a candle that just crushes all the longs. And then what? This nice structure, right? You see that? The wick of this candle comes up, pushes against this consolidation and rejects. Right? So you look for entries on pullbacks on this kind of candle. And if you lose, you fucking lose. You know, that's just how it goes. What up, Indigo? So, anyway, this is something that I'm looking at, and I know everybody, not everybody, but a lot of folks are like, you know, maybe you're on FinTwit and you're listening to the Zero Hedges or the Sven whatever. I don't follow either of those guys, but Sven Heinrich or something. I don't really remember his last name, but I know he's a perma bear. You got to remember, these guys make their money from selling you fear. That's when you have markets that have moved like this, recency bias is powerful. And so people will sell you a lot of things preying on all this volatility. Right? I mean, come on, look at it. It's a little crazy. Here, let's get into the chart settings a little bit and go to the weekly. Let's fix this chart again. Okay. right? This is a little crazy. Come on, it's a megaphone. I get it. We're outside of another megaphone. Now we're getting a little more parabolic. You look at this channel here, like shit, this can't keep going. This is ridiculous. Yes, it can. Yes, it can. In a high inflation, cheap money environment, it can go on much longer than you think. And when the last bear is crucified, they will dump on you. That is how it works. Okay, so don't be a hero. I tell people on Discord, don't be a hero and try to step in front of the trend. You know, just look at what's happened and recognize that right now bears are getting squeezed, right? Because you essentially, if you redraw, let's say you just get rid of all this shit, okay? A lot of stuff, a lot of hypotheticals, okay, whatever. Just get rid of all of this, okay? That's fine. We know what's going on based on our 60-minute chart, okay? Let's just get rid of a lot of stuff. Erase, okay. You know what? Maybe we want that one. Okay, whatever. If you take a trend line, this is such a common trend line for bears right now. And I don't even scan Twitter for this shit. I don't. But I know it's common because of my experience. It's right here. See this? Watch. Just bear with me. Right? Forget this line is here. Forget this channel is here. What did this... Before we were all up here, what were all the bears thinking? Right? Get rid of all this. Just get rid of it, right? What were they all thinking? That is the question, isn't it? They were thinking, oh my gosh, okay, channel. Oh yeah, we're in this rising wedge. That's what we're in, right? You draw a low here like this. They're thinking, short this shit right here. Short it. But what's one of my, one of my favorite plays is when you get the rising wedge and it breaks above. And then it goes parabolic because of the shorts covering. And then you fight for a short entry. And you look for a return back to essentially that trend line that was broken. And you take off. And if you get more, if it comes back through here and it breaks this, then longs are toast. So remember, this is a weekly chart and this is a pattern on a weekly chart. So it's going to take maybe a week, 2, 3, 4 weeks. What are we in? We're in April, then May. And we get some earnings rolling around. If we're parabolic into earnings, those earnings better be amazing. And even if they're amazing, they may not be amazing enough because the markets are already too vertical. So think about that for timing. But right now, in the here and now, short term, right? A lot of day traders out there. Balance. That's all it is. Just balance. And it's bullish, right? So this balance area has a breakout target perfectly. It's kind of a messy balance area, but of 42.25. So that's this whole prior structure here. So balance from here, and it's shaping up nicely, is 42.60ish. So 42.70. Again, markets like to, they're not perfect. They like to go a little higher than you think, consolidate, and then instead of pushing up higher, because oh, it's holding the highs, it rolls over, right? Because people are hindsight traders. It's like, oh, it's already gone up this much. Now I feel comfortable because it's consolidating. I'm going to buy higher. Well, it already broke out of balance. Likely, bigger traders are just going to take profit on that stupidity, right? So, and that's all they're looking for. They're looking for sustained liquidity on the bid side, right? So that's what they'll be looking for. The large players sell into the liquidity of the dumb money, and they try to repeat the cycle as much as they can for as long as they can using insane leverage. T+2, that's why it matters. until the game's over for a little while, then we have a bear market. But anyway, that's where we're at. So the E-mini is looking fairly bullish. This pullback today had buyers. So yeah, we might chop around here, right? Might look at the weekly VPOC for a buy. If we look at shorter time frame TPO charts, I do believe we have some singles. Let's see if we can find it. Right here. Let's see what we got going on. Yeah, so we have singles down here to 50, but essentially what is that? 40, 49s. Yeah, so maybe, what does that line up with? That lines up with the 4150 volume point of control on the weekly, right? So some confluence, singles. So what do you want to be doing? You want to be going to your price, your chart, and then putting a big old area there so that, okay, let's modify text. We'll say weekly VPOC and TPO singles or whatever, right? I'm making it dumb for people who don't. I'd probably just say weekly VPOC singles, but whatever. Keep it up there like this. Okay, so see how it shows up on this 15-minute chart right here? Why? Because I just point it back because it's useful, because you get to see some singles on this chart. So this isn't going to show me the singles, but it sure as hell is going to. And you can see here, there's already, this is volume point of control was here. Makes sense that it was migrated here at some point. It was here early in the morning, then it migrated here, then it migrated here, right? And I think it migrated back towards the close, or right up here at the close around 71 or 72, something like that. But anyway, it's interest. It's an error. It's early morning point of control for the intraday price action today. This is a 15-minute chart. It's also weekly confluence. It's also singles, right? It's also about halfway down balance. You've also got all this here. So if you pull back here, you're gonna, if you have long remnants here now, we got the shorts today, right? Now everybody's bullish. So what? Take it a little further than everybody thinks. So if we get here, maybe look to go long, right? But watch your footprint for it, right? You're gonna want to see. Let's see here. Let's just do red. You're gonna want to be. So this is absorb device. You're gonna want to see. Let's say if we're falling, like so, right? Price is falling. You're gonna want to see. I'm trying to make this as informative as possible. We go through all this stuff in real time on Discord, or I do a lot of times. I'm trying to share with as many people as I can, and hopefully on Discord people start educating me on it. But as we fall, let's say this is, we're going to say this is 50. Okay, we're going to pretend this is 50. Here, make it easy. This is 4150. Okay, you're like, oh man, we're almost there anyway. Yeah, we are. It's all good. Let's say it's 41, even says 41.7. Okay, whatever. You don't matter. Okay, what you're going to be wanting to look for is as you get close to 50, 55. Oh, what a fail. Okay, 55. You're going to want to see ice. You're going to want to see ice a little higher. Then you're going to want to see more ice. And then you're going to want to see even more ice at the 50 line. And then you're going to want to see it go. Boom! And then instantly, boom, right up. Okay, so there's different ways to get in here. Maybe you're like, well, this is 47 or 46 or something like that. Depends if it happens during RTH or overnight. In overnight, they're just cruel, man. They will hit stops all the way down here. 15, 20 points, no problem. They'll just search for the liquidity, And then during RTH, it'll be a lot more. There'll be a lot more buyers. Let's say overnight, we go down to 40, 40, 44 or something, then spike, and then they sell it off in the morning, right? And then you get to 50, you'll start seeing ice, 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 ice. And then, boom, it'll come down, it'll quickly go back up. You might even only get like 4 to 8 ticks out of this. So the aggressive entry is like 4 ticks, 8 ticks. And then you might be low of the day. You might be tempted to take profit right up here. You got to be a little patient. You might have like a 20-point winner on your hands. So this is how you do it. Right? You look at things like this. This is pretty specific, isn't it? But it's one possibility, and there are like a lot. But I'm looking at a bunch of different confluence to kind of figure out a little bit of a game plan here. All right, marking my charts up a little bit. I don't personally, oops, hide drawing, not erase. I don't need to keep a game plan notebook because I keep it all on my charts in this organized kind of way. Right? It's labeled here, so come Sunday night, I'll be looking at this again and remembering what I went over, and maybe the YouTube video is enough, right? It's part of what helps me is I talk about it and implants it in my memory a little bit. It's better than me just thinking about all these things, but certainly you could document it like I'm doing and still remember. But it's useful to go over all of this. Keeps me a little bit sharper. Anyway, so that's one plan. So let's see. Taxley. So if you look at my YouTube header or like the banner, there's a Discord invite there. I think it's the far right. It doesn't have like an icon that's like Discord for whatever reason. Oh no, maybe it does. Yeah, I don't know, but it's up there on my banner. It's also on my Twitter profile. So there's an invite there. There's only one invite for the Twitter. It's unlimited until if I get too many people in there, it gets distracting. Then obviously I'll shut it down for new people. But there's no charge or anything. It's just there's rules, and yeah, we have mature people in there, and there's no petty immature bullshit. So if someone's listening to this and they're like, yeah, I'm gonna go spam or I'm gonna go troll, I won't even give you a warning. I'd just be like, see ya. If I was charging for something, I couldn't do that, and I don't ever plan to charge for anything. So I'm just saying it's going to be pretty fucking strict. I've only banned one person. They were just being a bit of a troll, condescending. No, there was absolutely no warning. I don't really care about being fair. But that said, yeah, we have 85, 90 people in there or something. Nobody causes problems. Everyone's cool. But I'm not going to sit there and spend a shit ton of time moderating the thing. I'm gonna if you're a dick, I'm gonna ban you. Or if I know you and I've known you for a while and you're a dick, I'll just I tell you hey, you're not following the rules. It's not fair for everybody else. Blah 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 blah. Yeah, there's some rules, like if you're gonna post opinions there, back it up with rationale, and if you can, a chart. Right? Not everybody's good at screenshotting, so I get that. Not everyone's gonna give a chart, so whatever. But if you are gonna have an opinion there, just give your rationale as best you can. That's it. It's really basic, man. It's hard for me to keep up on YouTube, guys, like with the comments. It just is, because there's such a delay on here right now. So I'm already talking about something else and you guys are asking questions. That's why I'm going to go with Twitch for these live streams. But part of this is I'm trying to get the word out by doing it on YouTube. I have more YouTube followers, so I'm trying to get the word out to for people to go follow me on Twitch. I've put I'll put a link in the description of this video below, so just it'll be a lot more useful for me to interact. I mean, on Discord I'm always answering questions and stuff, but like next week, I missed a lot of opportunity this week on the stock side. On the E-mini I was locked in, so I was making money, but On stocks, there was a lot of opportunity I missed this last week because I was really trying to educate and get folks to see the value in essentially the way that I try to interpret the markets, because I know there's value there. Like I'm a consistently good trader, so I'm just trying to get folks to see the markets through the eyes of heavy confluence and context and stuff like that. So that's what the Discord's about. You're a lurker, Taxley? That's cool, man. Yeah, studying. Oh, I'm studying too. I can't wait to get to my family. I cannot wait. I haven't had dinner. My wife is off for a week on vacation. So I'm just excited to hang out with her and my kid. My family is lovely, so I'm just putting the hard work in so I don't have to do anything tomorrow and really hardly anything Sunday. So I did all my equity charting, showing a little bit of stuff on the E-mini here, but I already have a pretty good grip on the E-mini. So this is all mainly for you guys and to plug my Twitch, because that's where I'll be doing stuff. And then the Discord, but I don't really care if more people join Discord or leave or whatever. I have enough people that keep me interested on Discord, and that's really my main goal, is to talk and have folks that are good dialogue, and we throw ideas back and forth, and that kind of thing. There are a lot of lurkers on Discord as well. They don't say anything, but I would say maybe 10% of them are people that have followed me on Twitter for the last year, and they know exactly what I'm about. And on Twitter, they've thanked me for everything that I've done. I know who they are on Discord, and it's all good. They don't have to say shit, because I know some of them are quiet folks, so I get it. So, but just no pot stirrers. So enough of that. So I don't even know where I was. I was just giving a scenario for next week and how I might look at it. But yeah, overall, markets are kind of bullish. I took a cue from some folks that recreated my flow footprint chart here. Right, this has the market depth historical graph on there. But I noticed their bars here, the percent delta bars of volume, were a lot narrower, right? So essentially what that allows them to do, and they were using net deltas up here, that allows them to widen them out when they want to. So they kind of look like this. So I narrowed mine up. See, so I'm taking cues from you guys, right? Before I was maximizing them edge to edge, right? So now they're a little smaller, right? So it doesn't really affect anything. To me, it's still the same effect. So now, but now at least I can do this, right? And then the bars don't overlap and do something silly like this. I'm never going to have it this narrow anyway, so. Right. So if I wanted to kind of look at the bars like this and look a little bit, anyway, I just make them wide enough to where the ICE label lines up on the left without overlapping the deltas or anything like that, or without hitting volume over here, right? So anyway, not turning this into a Sierra chart thing. This is an E-mini review, and I guess plugging some of the places we all collaborate with trading. So I think it's good times. I hope it is for people. I should adjust these bars here too. So let's see. Is there anything more? No. The TPO here. I'm not going to go into all the minutia of this structure. It's not. The bigger levels are more important. Intraday, yeah, you can look at this, split it apart, see what's going on, right? Sell bar, I get it. Long liquidations up here at the top, or that's essentially what that is. We liquidated the shorts, kind of a little P shape, right? We know P shape, what that means if you're in a market profile. Commitments of traders breaking out. This is balance here and here, so that's the larger. This is the larger pattern. Here is this. If you're a bear and you don't like it, too bad. It's the larger pattern. So we're moving up to there, which is why I was saying, my my short term. What chart was it? Yeah, it was this. So that's why it's here. That's based on the larger breakout pattern of this balance area. So that's just a common pattern. Let's see. Let's undo all this. Anyway, I think I'm done, guys. Hope you guys have a good weekend. Maybe I should get rid of some of this stuff on the chart. I think I will. Clean it up. But I'll do that after I'm done. Hope you guys liked the intro. It was like a Wall Street, Wolf of Wall Street, or something like that. Oh, there's a question. I don't know if you covered, did you enter long this morning? I entered to target. I did not enter long this morning. I only got 5 hours of sleep. And I was feeling like shit, not in a conducive state to trade. So, man, I always miss moves. I miss all kinds of moves. I am not a furu. I don't catch the bottom and sell the top. That's just not me. Shit. Man, just read some of my stuff on Discord. You'll know I don't expect to catch all this. That's just ridiculous. You know, like you got to have context. So this to me, once we started pushing into this bar, that was a long setup, but I was doing other things, and I was not in a conducive state to trade on. A little bit of sleep, and I just knew that my emotions would have got the best of me in all this consolidation through here. But I knew, essentially, I had a very good idea once we broke into this crazy volume. Essentially, this 5-minute bar right there, once we broke into that, okay, right in this area, I said, shorts are going to get wrecked. And then when we consolidated in through this area, I was pretty blunt about it. I asked people, is this a good short here? Right? There were people in my Discord who were short. And I think I talked some of them out of having a bigger losing. So we went over the whole context of why it's not a good short here intraday. So if you join Discord, you could read up through all that chat. It was all real time, and we were all just discussing it, having our opinions. So maybe a little bit more me, but yeah, it was good talk nonetheless. I enjoy having to or trying to justify my thesis. Not justify my thesis, explain what my thesis is, right? And then justify my positioning through rationale, just market logic, trap traders. And it worked out, but whatever. I guess if you could hold through all this pain, you got back to break even, I guess. But I wouldn't be surprised if Sunday, all these people who shorted, if they're still holding, if they gap it up, if we get a little sprint here, and then maybe they sell it or something, looking for that liquidity at 50, 49s, 46, 44s. But it would not surprise me one bit. Anyway, man, let's see. Yep. All right, guys. Well, hopefully see you in Discord or on Twitch or whatever. And most important thing is that we all have the attitude of learning, because honestly, we're all struggling in this game together, and there's a lot of ways to skin a cat in the market. So, if you do come to Discord, bring a value add, man. Share your points of view and do the best you can at it. I'm gonna bring that same energy, 100%. I'm passionate about trading, and I'm passionate about sharing what I know and getting positive value add feedback. So that's what keeps me around. If I don't get that, it's not a threat. I'm just saying it's a matter of fact. If I don't get that, well, then I won't be around, because then it's not worth it to me. So I'm not saying that as a way to pressure anybody. I'm just saying, that's just the facts. I don't talk there to pontificate and get up on a soapbox. because I like to hear myself talk. It's tiring for me, but I have a lot of personal growth by doing that, and I understand that. So anyway, have a great weekend, and yeah, go do something fun. I hope you guys all fucking crushed it in the markets.